Welcome back, guys. This is Building a Million One Day at a Time. So it's been a minute since I made a video. I had some stuff going on and I have been wanting to make a video about real estate for a little while now. Things have been happening really crazy since the pandemic. The housing market's kind of just blown up. And I want to talk about a little bit why and kind of what's going to happen in the future and how you can still invest. So after when the pandemic started, people were trying to move out of places that were being really restrictive. And so they were moving to other states that didn't have as much restrictions. And Utah was one of those states that kind of didn't have the restrictions. And Southern Utah is a really beautiful place to live. So we had a lot of people moving in and they were buying up a lot of the rental properties and stuff like that. And then they were kicking the tenants out and moving in themselves and living in them. And because the federal the Fed dropped the interest rates for banks to 0%, banks were able to loan interest or money out at interest like 2 to 3%. So money was becoming really cheap to borrow. And so everybody that could afford to buy was buying up everything on the market, which left no inventory. I think here where I live locally, there's 10 real estate agents to one property. So it's pretty crazy. Inventory is basically obsolete, or non-existent, I should say. And the other big thing is the prices of homes have just shot up. So what you were buying last year or the year before for around $200,000 is now costing you closer to $350,000. And the higher the market's got with prices, the less buying is happening. And that's what we're kind of seeing right now. If you look at Redfin's statistics, price per home is up. There's starting to become more properties on the market, but people are not buying. There's less pending properties because, one, I think people are just saying, hey, I'm fed up. That's way too expensive. We can't afford that. And it does make sense. I mean, in a small town that I live in, the average income is about $33,000 a year. A person that's making that kind of money cannot afford a $350,000 house. And so you're getting, it's crazy because I was just looking on the market at a home that I was interested in, and it's like 1,500 square feet, but they want $375,000 for it. And it has a small yard, but that's just ridiculous. I mean, people can't afford that here. I mean, if you're making better money, then absolutely you can afford that, but the average income cannot. And so you're starting to see people saying, hey, we're fed up. So one, properties are expensive, and that's what they're asking me. They're saying, hey, should we hold on? Should we wait to buy an investment property, or should we buy one now? Well, here specifically, because property prices are so high, rents have gone through the roof because there's nothing to rent and everybody's getting kicked out of their rentals and they're out looking for places because there's nothing out there and everything's been picked up. So I had a rental that changed. I was renting it last year for $900 a month. It was a 2-bedroom, 2-bath. I did allow them to have a pet, so they were paying a little extra with a pet fee. So normally they'd be paying about $850 a month. And I just rented it out and I had over 100 applications for $1,200 a month. And I had people offer me $1,500 with a bigger family to be in a 2-bedroom, 2-bathroom apartment, 800 square feet. That's just unheard of here where I live, okay? Now, because rents are up, it still does make sense to purchase investment properties. You're still looking for those wedge deals, something you can get a little under value. You can put a little bit of money into it and it's worth more, and then you can get higher rent out of it as well. So I don't want to divulge the information right now during this video, but I do have a big investment that's in the works right now that I want to do a few videos on and show the process of looking at properties, making a wedge deal offer on that and getting that accepted. One of those things is to make sure you're a great real estate agent. Good agents are willing to go to bat for you, get the deal done, whatever it takes. So make sure you do have a good rock star agent. If you live where I live locally, I can give you a few realtors' names that are really great at what they do. So when you're looking for those wedge deals, you want to offer under market value, and you want to make sure if it's an investment that you're going to be making about 1% monthly of your initial purchase price. So if you bought it for $100,000, you should be making about $1,000 a month on that property. Now, those are really hard to find right now, but they are out there, and you just got to keep looking for them. I found 3 that I've been interested in the last few weeks, and I did make an offer on one of them, and I will get into that in the next video. But so they are out there, okay? But what we're seeing is we've seen that kind of peak out, that limit peak of what prices are going to be at and what people are going to purchase at. So we do have properties on the market that are way overpriced, and they've sat and sat and sat. And I've started seeing those kind of start dropping in value. When you see houses drop in value like that, that's a good indicator that they're willing to take a lower offer, and there's potentially that wedge deal to happen to be able to get it under market value to where you can actually make a little bit of money on. So don't get discouraged that, hey, housing prices are skyrocketed up and we can't afford them, because they are peaked and they are starting to come down. Prices are starting to come down on lumber and materials to build, which means we can build, building production is going to start happening faster, and you're going to see more houses on the market, so which means going to bring those prices down a little bit more too. So don't feel scared to make an offer. If you do want to make an offer, what I've been told and what I kind of go off of is the statement that, what's too low. And I generally try not to offer lower than 20%. I don't want to offend anybody really, but I also want it to be a good deal for me. I feel like it would be a good deal for them. So I generally look for wedge deals that I can get about 20% less than market value, up to about 10%. So in that range, if I can get a market deal, and again, it depends on how much the price is. If it's a $100,000 home, or sorry, $1 million home, taking $100,000 off of that market value at, as 10%. So don't feel bad for offering too low. The worst thing I can say is no, but make sure that you are actively looking if you are wanting to buy an investment property, because they go really quick. So I would suggest getting pre-approved already for the amount that you can, so that when you go in to make an offer, you have that pre-approval letter you can give them with your offer, so that they know that, hey, these people are serious. They've got the money accessible, and they're ready to purchase. That makes a big deal when you're doing a wedge deal. People are willing to accept your offer a little less and get the deal done quickly than to accept a full price offer but have people jumping around from bank to bank because they don't have pre-approval and they're trying to get a specific interest rate and stuff like that. It becomes a headache. So definitely there's opportunities out there. Don't feel discouraged if you feel like properties are just way too high. They are starting to come down. They are starting to peak out. So keep that in mind. Appreciate you guys here today. This was Building a Million One Day at a Time. We'll catch you next time.